China's auto sales in January are out. Unlike previous booms, this time the data are dismal. In short, the situation of China's domestic new energy vehicles is very serious. In the sales of new energy vehicles throughout January, only Tesla maintained positive growth in China, and all other China's new energy vehicle brands fell into a sharp decline. And that is not a small drop, but a big drop. There are many car companies that fell directly into the abyss. Among them, BYD, known as the king of China new energy vehicles, also fell 36%, from 235,000 to 151,000. Among its products, the most expensive products are BYD Han, BYD Tang, and BYD Seal. In the past January, sales of BYD Han plummeted 59.34%, BYD Tang plummeted 55.91%, and BYD Seal plummeted 57%. In other words, BYD's sales of 151,000 vehicles are mainly supported by affordable cars below 200,000 yuan. The price range covered by BYD Tang, BYD Han, and BYD Seal is exactly the price range of Tesla Model 3 and Model Y. Those who follow our channel must know that, as I have mentioned in the past videos, after Tesla's price reduction, AITO, Xiaopeng, BYD Han, Tang, and Seal were hit the hardest. Because the prices of these cars overlap too much with Tesla's main promotion Model 3 and Model Y, and they lag behind Tesla in terms of technology or brand power. According to data released by the China Passenger Federation, Tesla's estimated sales in January exceeded 66,000 vehicles, a sharp increase of 118.4% month-on-month. I expect Tesla's sales to increase further in February amid Tesla's price war. So, what harm will the sharp drop in sales bring to the emerging China's new energy vehicle market? Who caused the tragedy of China's domestic new energy vehicle sales? Which Chinese car brand is most likely to be eliminated this year? Hi! Welcome to Auto Age. Before we started today's video, please subscribe to the channel and turn on the notification bell. Okay, let's get started. At first, what harm will the sharp drop in sales bring to the emerging China's new energy vehicle market? Although many Chinese say they support domestically produced cars, their wallets are still honest. After Tesla lowered the price, in the price range of 200,000 to 300,000 yuan, Tesla is basically unbeatable. AITO and Xiaopeng both followed Tesla in price cuts, but after the price cut, AITO and Xiaopeng still did not stop the decline in sales. This is very scary for the China's new energy vehicle industry. China's domestic production of new energy vehicles has been subsidized for more than 10 years, but to this day, only BYD has achieved large-scale profitability. It is expected that Great Wall Euler and Geely Zeekr new energy vehicles will also be profitable, but other new car manufacturers are still at a loss. Following up on Tesla's price reduction is a painful choice for any Chinese new energy car company at this time. On January 1 this year, with the complete withdrawal of subsidies, all new energy car companies was under greater cost pressure. From the end of last year to the beginning of this year, car companies such as BYD, Changan, and NESA have successively launched a round of price increases in order to alleviate the pressure. However, Tesla's price cut is the start of a round of price war, which will lead to the survival of the fittest in China's new energy market. Domestic car companies have no choice but to follow up with price cuts. If they don't cut prices, they may be eliminated faster. So, who caused the tragedy of China's domestic new energy vehicle sales? In my opinion, there are three main reasons for this. First, Tesla's price cuts have indeed had a huge impact on domestic new energy vehicles. The second is that new energy subsidies have been fully withdrawn, and China's domestic new energy car companies have become less competitive. Without subsidies, the cash flow of domestic new energy car companies is under pressure, and they have to shrink marketing expenses. Moreover, with less marketing, sales have also declined. The third is that domestic new energy vehicles, which have been cultivated by subsidies for more than 10 years, still do not have sufficient international competitiveness, and they still face various restrictions and containment on chips. At present, the auto industry uses less than 5% of the supply of domestic semiconductors, and 95% is imported. Among them, the chips of electric vehicle controllers are 100% dependent on imports, which are basically monopolized by the United States, Germany, Japan, South Korea, and Taiwan. In the case of insufficient technology, China's domestic new energy vehicles brands rely too much on marketing. According to the public data in the semi-annual report, the marketing management expenses of NIO, SPENG, and Ledingideal are 2.695 billion, 1.752 billion, and 1.316 billion respectively, and the research and development expenses are 1.571 billion yuan, 1.399 billion yuan, and 1.168 billion yuan, respectively. The marketing expenses are all high on R&D costs. In the same period, Tesla's research and development expenses were 8 billion yuan, twice the sum of the research and development expenses of NIO, Xiaopeng, and Ideal, but the marketing expenses were only 180 million yuan. This is related to Tesla's marketing strategy. Tesla's marketing does not rely on traditional advertising, but to create two super internet celebrities, Musk and Tesla. Well, in 2023, it will be a battle of life and death for China's domestic new energy vehicles. Those who could not withstand the Tesla price war were eliminated. I predict that the abandoned Evergrande car may not survive this year. Moreover, many people believe that Tesla's price reduction will set off a comprehensive price war for China's new energy vehicles. This is wrong. Because for most of China's emerging new energy car companies, they have no room to cut prices. In the past 2022, all new Chinese car-making forces have suffered serious losses. If you continue to cut prices, you will only lose more. What they have to do is to maintain the original price and increase sales, or increase the price and maintain sales. At this time, only Tesla holds the trump card of price reduction, and only Tesla has the most room for price reduction. This means that 229,900 yuan is not the bottom line for the price of Tesla Model 3. If the boost to sales does not improve, Tesla Model 3 will usher in a wave of new price cuts before or after the launch of Tesla's new car. Besides, every price cut by Tesla will have a strong impact on fuel vehicles. If Tesla launches a battery electric vehicle worth around 150,000 yuan, basically, these fuel vehicles will not be sold. Therefore, in my opinion, 2023 is not only a knockout for new energy vehicles, but also a knockout for joint venture fuel vehicles. For fuel vehicles, the scariest thing is that Tesla is just a catfish. It enters the car market of less than 150,000 yuan, and the price of China's domestic electric vehicles will be lower. The stock market of fuel vehicles will not shrink, but the incremental market will shrink significantly. To become the Volkswagen Group in the field of electric vehicles is the original intention of Tesla from the beginning to the end. So it seems to me that VW's good times may be coming to an end in China. Okay, that's all for today. Please put your comments below, and share your insightful ideas with other people. Do you want to learn about more auto stories? Please keep following our channel and like our videos. Your precious time with us is highly appreciated. See you.